Profitable businesses fail every year. And the reason can be uncomfortable. They may be making money, but they're still running out of it. If you've ever looked at your P&L and you thought, hey, we're doing pretty well. Then you looked at your bank account and it felt completely different. That's the problem. And this episode is for you. Hi, I'm Matt from Beyond BST. I've spent over 25 years building companies as a serial entrepreneur and helping small business owners avoid costly mistakes. Welcome to the channel. Quick question before we dive right in. Have you ever had a month where the revenue looked great, but the bank account told a completely different story? Drop a yes or no into the comments. I want to know how many people have lived this because I think it's probably a lot more than anyone ever talks about. In this episode, we're going to talk about why profitable businesses run out of cash and the 3 patterns that make it happen to small business owners more than almost anyone else. Thursday, we'll cover the 5 specific moves that are going to fix that problem. But today, let's make sure we understand exactly what we're dealing with. And to do that, we need to clear something up. Profit and cash, not the same thing. They never have been. Profit is just an accounting concept. It tells you how things look, on paper. If it's revenue minus expenses, that's profit. Cash is what determines whether you make payroll. Here's where that gap comes from. Easy scenario. If you deliver a service in January, you invoice the client. The client pays you in March. Your accountant records the revenue in January. Your landlord wants rent in February. That timing difference, that gap between when you earn money and when it actually arrives, that's cash flow. And if you're managing it specifically, not just tracking profit, but actually managing cash flow, you will feel that gap repeatedly and sometimes painfully. And once you understand the gap, you start to see the same problem showing up again and again. This first pattern is the most common. You may have clients who pay you on a net 30 or net 60, maybe even longer. And those same clients, they may be some of your best customers. High value, low drama. It's a great relationship. But your suppliers, your landlord, your payroll, or your raw materials, none of them are on net 60. They want payment on time, every time. So you end up in this position where you're basically financing your clients' businesses with your cash. And the bigger you grow, the more revenue that you're bringing in, the worse this problem is going to get. Growth actually accelerates cash flow problems in a lot of small businesses. And nobody tells you that part. And if that was the only issue, maybe you could probably manage it. But then you layer in something else. And that's the second pattern. And this one hits differently depending on your business. But almost every small business has some version of seasonality. Maybe your slow months are January and February. Maybe it's midsummer, or maybe it's a single off season that lasts 3 months. If you spend everything you earn in the good months, the slow months, they're going to break you. And trust me, I learned this the hard way. When I ran my mobile events business for 10 years, we had an incredible year, but really bad winters. And we learned the hard way early on that what you do with the summer revenue determines whether I survive in January and February. The business that knows its seasons and plans for them deliberately has a completely different experience than the ones that are just constantly surprised by the calendar. And just when you think you've accounted for timing and seasonality, there's a third pattern most people don't even notice. And honestly, it's the one that frustrates me the most because it's the most preventable. I call it subscription leak. Easy for me to say. Every small business has software or tools or platforms or services, and even consultants can fall into this pattern. And most of them are on monthly auto renew. And what happens is this: you sign up for something to solve a problem. The problem gets solved, or maybe you find a different solution. But the subscription, it keeps running quietly every month. I've sat with business owners who were genuinely surprised by how much they were spending on software that maybe they hadn't logged into in 6 months, or consultants who are still getting paid even after they finish their project. We're not talking hundreds of dollars. We're talking thousands of dollars every month. And the thing about a subscription leak is that it doesn't just look bad on a report. It's literally costing you cash every single month before you've even earned a dollar that day. The good news is these 3 patterns are fixable, every single one of them. But fixing them requires, specific moves, not just awareness. And that's exactly what we're covering on Thursday. Here's where I want to leave you today. If you're sitting there and you're thinking, okay, Matt, I know I have a cash flow problem, but I don't even know what my numbers look like. Let's start there. We've talked about budgeting on this channel in a way that's actually useful for small business owners. We've done it before. Check out the other videos on my channel. But on Thursday, we're going to get into the specific moves that address each of these patterns directly, cash flow problems. So if you've ever felt this, Thursday's episode is one you don't want to miss. Practical moves that you can start this month. Like everything else, I'm not talking about theory or motivational hype and accounting jargon. Before you fix your business, make sure your cash can keep it alive long enough to matter. And as always, thank you so much for watching. If you want to seek more content like this, please give me a subscribe. Let your friends know if they're small business owners. I'm sure we'll help them as well. And let me know in the comments too, because I often look there for new topics. Now, take a breath. You've got this. All right, what's next?